Good morning, everybody. It's Harry Swaminathan. It's Thursday, August 15th. It's 6 a.m. And I wanted to review all of our trades. We still have quite a few trades open. So let's take a look at what's going on. The markets right now, futures are down about 2 or 3 points. And let's see how everything shapes up. But the first trade we're looking at is Apple. Apple, of course, we have a fantastic bull call going. In fact, our long call, which was what we had originally. Now, let's see here. So, Apple is a no lose kind of a trade right now. Now, yesterday I made this other trade as optional. So, this was our bull call. We are right here. The bull call is up about $6,600. And then I sent out a notice that if somebody wanted to sort of milk this trade even some more, then you could add this bull call. And so I went ahead and added that. So right now you can see Apple is back to the 500 mark, and we have a total max profit potential of 20,550. Now we could potentially add some more, but we're going to wait. Let's see how Apple goes. It's had a really great 3 or 4 days, so we'll just see how this one plays out. So the next one we have is FedEx, and FedEx is nicely positioned. The iron condor, it's got about 35 days now. Let me take this simulation off. It's almost in the center of our condor, so really we just need to let this one play out. And on FedEx, we have a booked profit of $425 already when we move the bull put from 95 to 100. So we just leave FedEx as is. Then the next one on the docket is GMCR. Now GMCR, we want to be a little careful today. So let's go take a look at what we have. GMCR, this is our short straddle at the 77.5 and our long straddle at the 80. So this one's working out really well. As you can see, we've recovered over $1,500 of this started out as an early earnings play on the straddle, on the long straddle, and then we turned it into a calendar. And so now we already have booked $1,000 on this. So we still have a loss of 3,000 on GMCR. But you can see out of that, we've already booked $1,500 out of just this week by selling this, by turning this into a calendar. So this is working out really well, and that's exactly what we want to see. But now we need to be careful that GMCR doesn't really move out of our calendar zone. So what I'm talking about is right here. So anything between 76.5 and 78.5 is okay. But if we think that it's going to move out of that zone, then what we need to do is close the short, the short straddle and take whatever profits. Right now, the profits on the short straddle is about $1,500. So the goal is after this week, if we are able to capture most of this premium, you can see the premium that we paid is right here, 1.74. The premium that we received is 1.74 plus 1.95. And if we can capture most of that, we would be pretty much close to break even. However, given that today is Thursday and tomorrow's Friday, we just want to make sure that GMCR doesn't move too far out from our zone. So we have to be watchful of that. I'll send you an email on that. Okay, so the next trade after that is Google. And again, let's go take a look at Google. This was also an interesting trade. Google has been looking quite bearish. And yesterday we added this long 850 put. But now to view that properly on the graph, you have to change your expirations to 2 expirations. That's what you'll see. So if you take out this is what we had. We had a Google Iron Condor. And of course, now on Google, we have a booked profit of 1700. That's why you see the white line below the zero line already. Of course, we're still down on the position. We moved the bear call from 950 over to 920, but still Google continues to go down. And so yesterday, what we did, we added this weekly option. And so this is what we have. We paid about $3 for this weekly option, so totally 3,000. But you can see our max profit, even after paying for that, is 10,100. So that's, you have to look at this long put option as, as something like an insurance, because right now Google is bearish. And so if that trend continues over for the next 1 week, this weekly option is not this week's option, it's next week's option. So we have about 8 days on this option. So if Google continues, then we have a pretty decent hedge right there. And that's exactly what we wanted to achieve with Google. Then the next one on that, Herbalife is just a beautiful trade right now. As you can see here, Herbalife was, again, we were digging out of a hole over here after earnings. And now you can see, hey, all Herbalife traders, you can see now we've recovered our 2500. We are up 2720 on this short strangle at this point. And what you really want to do now is to see how we can add some safe wings over here. So if you look at the Herbalife, we are right here. It's beautiful. It's right in the middle of our range, which is from all the way from 55 to 79. So it's a great range. But what we now want to do is to add some cheap wings so that we, in case Herbalife makes a big move, then we are protected. But this trade is fantastic now. If anybody wanted to close it, because if you felt that all you wanted to do was come back to even, well, we are there. In fact, we have a $200 profit. So, anybody on the Herbalife trade, if you want to exit, that's perfectly fine. This is decent, but I would not advise you to exit because I think there's a lot of profit here to capture now. So that's as far as Herbalife is concerned. All right, so let's see, what do we have next? LinkedIn, I was thinking of closing the short. You can see our short is very profitable, and I was sensing that LinkedIn, it's come down to 1925. But while LinkedIn moved yesterday, it came down about $5 or $6. So really, I mean, let this be now. We are only down 450 on this trade, so we'll just see how to manage that. Priceline is important. Yesterday, yeah, sorry about all the emails. I thought there was some bad news on Priceline, the way it was moving down. So I figured it's better to be safe than sorry. Again, this is an earnings trade which we really need to close out either today or tomorrow. Our net position on Priceline is that we are still down 900. Yesterday we moved our bear calls from the 990 strike price. First we moved it over to 950, and then we moved it over to 940. And in the process we captured good profit, about $1,700 or $1,800 profit. But we are still down 900. So hopefully today you can see there's a lot of time decay here. The theta on this position is almost $1,200. So if Priceline stays between let's go take a look at its Priceline graph. Okay, so that's what it is. So it's not a very huge range, but let's, if you zero in there, it's 933 to 947, 948. So it's there. It's a $15 range, although it looks very small on the graph. It's a $15 range, but Priceline can move. So we want to manage this. And like I said, even if we come back to even on this one, that's fine. And the only other one we have now is the spider. And on the spider, yesterday we did some gamma scalping, and again you can see we've accumulated some negative deltas. So that's good. Let this go. And let's see how we can deal with it. But this is not a position that we want to hold for very long. So I'm going to try to think of ways we can come out of this position in the next 3 to 4 days. It's not going to happen this week, but by next week I think we need to exit this position because it's already been about 10 to 12 days. We are holding this straddle, and any day, although we have 60, it's in the October series, so we have over 60 days, but anytime you hold a straddle for more than 10 days, you're going to see the negative effects of the straddle come in, and then it's very difficult to get, climb out of the hole. The stock has to make a huge move to come out of the hole, and we really don't want to get into that situation. So a little bit of gamma scalping here and there. Let's book some more profit, but the goal is by next week we need to come out of this trade. So that's as far as all the trades. We are watching Priceline today, we are watching Herbalife, and we are watching Green Mountain. So at this point, I don't want to add any more trades for today because like yesterday, like Priceline, if some big move happens, we want to be prepared. So, but Green Mountain, we definitely want to protect our profit from the short straddle, and Priceline, we want to manage it properly. So these are the trades we'll be looking at today. Thanks. Bye-bye.